Morning everybody, Mike Vacchi, Princetontrader here for Mr. Topstep with your Wednesday morning pre-market webcast. Okay, so we made another new low in the Globex overnight. Current low is 1320.75. You know, it's interesting because the market is riding the lower Bollinger Band on the daily chart. It's very weak. It's becoming stretched. And you're starting to hear a lot of the same arguments that you heard back in February and March with respect to the upside. It's overdone, we've come too far, we're due for a bounce, things like that. Whereas before you were hearing, we've run too high, we need a pullback. You know, markets will run longer in either direction than you expect them to. So coming in every day and buying in anticipation that today is the day that it's done, it's going to get you hurt more often than not. So, you know, use stops and be hedged. It's okay to take a small position to see if you can catch a low. But if that position doesn't work out, you have to have an exit plan. And you've got to be out of that. Otherwise, you're going to find yourself, you know, very underwater, because right now you're counter trend. While the market is ultimately in an uptrend, at least for now, we are only 20 handles right now. The current trade's 1331. We're 20 handles above the 200-day exponential moving average. On the lows this morning, we were only 8 handles above. I'm not calling that a test, but if we go down and make new lows over the next couple of days, if for some reason we break below the 200-day exponential moving average, and on a test of that moving average's resistance, that moving average holds, those of you that have followed the webcast for months and months now, almost a year that I've been doing this, you know that when we get below the 200-day, it automatically becomes, you know, sell rallies, no questions asked, until that moving average can get regained. So we're getting back to having those kind of discussions, and those were the discussions we were having every day on here about, you know, this battle over the 200-day exponential moving average. And it was a battle that the bulls clearly won, and they ruled the next 4 or 5, 6 months of the market, which is what we were talking about. And now we're back down to test that level, it looks like. So to come this close to a longer term moving average and not test it, it is unusual. So if we do go down and test it straight from here, I don't think the bulls will have enough strength left in them, or the bears rather will have enough strength left in them to knock it down much farther. It would be pretty exhausted by then. I am still looking for a bounce. My bounce area is still up around the 20-day exponential comes in at 1368.75, and that would be my target on a multi-day bounce, would be 1368.75 up in that area. I think when you get up to 1370, maybe on a really high side, a retest of that key 1377 half level, but you know, beyond that, I don't think there will be much more to it. And you can be long that bounce with an absolute mind to sell it. Okay. Let's do support and resistance. Current trade 1331 quarter. Let's do the downside first. 1327, 1323, 1317, 1312.09 200-day, and below that 1307.63. On the upside, you've got the daily pivot 1333.67. It was on an attempt to regain that daily pivot that we failed, and did the 10-plus handle move down to 1320. Above that, you've got 3-day pivot 1339. The 100-day exponential comes in at 1345.69. On an intraday rally, that would be my area of resistance today. And above that, 1352, 25 9-day pivot, 1355 quarter is your 20-day pivot, 1357.92 is the 45. Okay, everybody have a great day. Mike Vacchi, Princetontrader for Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.